Thank you for tuning in and welcome back, team. With real estate investing come a lot of enthusiasm, a lot of excitement, and unfortunately, even some mistakes. So we're going to review in this episode today, you're going to learn the 10 awful first-time real estate investor mistakes people make all the time. By knowing what these 10 mistakes are, you can keep yourself from making them. Now, I do want you to consider something because you might be watching this video right now thinking, Andrew, I have watched a gazillion videos. I have read at least a million different articles and posts about real estate investing. I don't want to commit analysis paralysis and I'm ready to take the next step. Make sure that you review these 10 mistakes that people make all the time before you make your first investment. That way, you'll be better prepared to make a sound investment and actually be turned on even more and even more passionate into your real estate investing career, as opposed to losing your money and deciding to tap out and you could have been the world's next best real estate investor. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line and say hello, my contact info is below. If you haven't done so already, please go ahead and subscribe to this channel now and like this video. For reference, I upload 6 days a week, so be sure to tap the bell icon and get notified of the next video. Okay, team, so let's take a look at this and delve a little bit deeper into these 10 mistakes that real estate, especially first-time real estate investors, make all the time, okay? The first mistake is actually getting bad financing. Not every one of us all obviously have cash to go out and just buy a property, right? I mean, it'd be beautiful if we did, but even if we did, we would need to know how to make a great investment out of that money and not lose ourselves just because we had the cash on hand. So let's talk about bad financing. You know, it's one of the most lethal mistakes that people make. So, you know, I can really narrow it down to 5 core elements. Now, keep in mind that bad financing might mean something different to you, but here's 5 things that makes bad financing what it means to me. And then you can tell me what you think about it in the comment section, okay? So the first one is a high interest rate. Obviously, that's a no-brainer. The higher your interest rate, the more difficult it is to make your cap rate return at a level that's going to make sense in the long term, right? The second is getting an adjustable rate mortgage. Now, I'm not going to downplay adjustable rate mortgages completely. There is a time and a place for them if you know what you're doing. But adjustable rate mortgages, for reference, is part of the issue of how we got into the 2008 debacle when everything just collapsed. People were using those things all the time and using them in the wrong way. If you use them in a smart way, it could make sense. But as a first-time real estate investor, you might not want to go that route, especially if you're on a buy and hold strategy. The third thing is a high monthly payment. Obviously, kind of goes back to that cap rate, right? The higher that monthly payment, the bigger the issue that you're going to have on gaining out your return. The fourth is having a balloon payment. If you have a balloon payment that explodes all of a sudden, that's going to crush you, especially if you're on a buy and hold strategy, okay? The fifth one is personal recourse. Personal recourse meaning that if you decide that you're going to collateralize your own assets, let's say your primary residence, your bank accounts, maybe you own a business. If you do that and you collateralize it, you lose your tail on that property, then you might have just sunk your personal self. Always take care of yourself on your personal side first, and then look after your professional ambitions with your real estate investing career. Please don't collateralize your own personal residence to make your first investment. I mean, it's definitely an option, but again, you got to be very, very careful about this stuff, because making the right steps and the right plan that's right for you can bode very well for your success. Getting into real estate investing without a plan, well, it's not going to go well for you, okay? So then let's look into the mistake number 2. Mistake number 2 that real estate investors make is a bad location. Now, you know, real estate is like what? Location, location, location. Well, guess what? It really is. So whenever people get into bad locations, they're not really assessing the businesses around the area, the schools around the area, you know, what's up and coming around the area. You know, they're just not taking a closer look at the demographics and the growth of that specific area. What happens when they do that, they can actually buy in the worst of areas, thinking that it's going to be one of the best improvements, best potentials for return on investments. They could be right, they could be wrong, but if they haven't done the research, they won't know. Because like here in Las Vegas, Nevada, there's certainly areas that are might be considered not as desirable as other areas to a lot of different people, and those areas are probably going to see a pretty good resurgence coming up here shortly. They've been seeing a pretty strong resurgence over the past few years, and it seems to only be getting stronger. Well, why is that happening? Because we have a shortage of inventory. New builders can't build quick enough, and we also have the Raiders and the Golden Knights now in Las Vegas. So there's a lot of different people moving here from out of state. So for example, in Las Vegas real estate, then that might present a opportunity for people to make those kind of investments into older properties, if you will, renovate them. Might be a small margin of flipping opportunity there right now in the current market. Pretty pricey out here as far as that is concerned, at least if you don't know what you're doing. You gotta know what you're doing. That's what the real big clear message of this video really should be for you today. But do your research on those areas, no matter where you're looking to invest. Make sure that you're looking at what's going on in the area, what kind of shopping's going in, what kind of schools are in the area. For reference, if you're doing buy and hold, the higher the school rating, the better your possible rent and the more stable your tenant's going to be, especially if they have kids. Okay, kind of a no-brainer, but sometimes it's something that gets overlooked whenever you're scouting out that first investment property. Mistake number 3 is misjudging resale or rent value. This happens all the time. You know, you can misjudge resale value because here's the thing. If you got a market that's appreciating, and across the United States right now when I'm making this video, it's a very strong seller's market, and definitely is appreciating in a lot of different areas of the country at a very, very fast pace. If you bank on what happened last year or in the last quarter, in the last 6 months, if you will, on real estate appreciation, this again goes back to the 2008 issue when people were losing their tail by not knowing what the forecast was. There's different things that you can look at in the forecast. In fact, I made a video earlier this year about real estate predictions for 2018. It's not my predictions, it's just me that I actually did a lot of research with economists. If you want to check it out, I'll pop the card up for you so you can give it a look. But in that video, I talk about market cycle quadrants, and I also talk about a lot of things that you could look at for indicators of a real estate market to know whenever it's going to shift up, down, or if it's going to go lateral, meaning a more stabilized, balanced market. I think what you're going to be seeing here soon is a more stabilized market. Just food for thought there. But you can easily mistake that. It happens all the time. So the next thing is that they can, oftentimes they'll mistake their rent value. You know, just because they have a desired amount of money they want to get that makes sense for their capitalization rate, they just say, oh, I'm going to get $2,000 out of this $200,000 home. Well, that'd be perfect. That'd be absolutely perfect. That's 1%, right, of the cost of the home. You're doing really, really good. If that's the case, at the same time, it's not always practical. So you got to be careful about that. So, you know, it's not like anyone expects you to be an expert. Most definitely, we're not any experts. We always learn and we grow together. So let me just give you 5 different tips that you can use right now to help yourself whenever you're assessing the market. Number 1 is to reduce your target market to a relatively small and manageable area. You can do that through various ways of just looking, okay, what's my target market? Who do I want to rent to? How much am I expecting? And how is this going to work into my business plan? The second one is to study. You can study transactions courtesy of tools like the multiple listing service. Get in touch with a trusted real estate advisor. Again, if you need help finding one, just let me know. We're happy to help out with real estate investing and any other things to do with real estate. You can also turn to sites like Zillow, and you can also turn to your local tax assessor's website. Now, I'd like to drop this little thought in here, and I'm going to put this link in the show more description below. I'd really love to know how this works out in different parts of the country, or what your links are in your parts of the country where you're at. It's called an open web link. An open web link kind of has a collation of all of that data in one spot. It's super robust, super powerful, and it's public domain. Interestingly enough, you can get that much information on property. You click on that link, you'll get a very good idea of what I'm talking about with just how powerful and just what kind of data you can actually get. And it's amazing to me that it's just publicly available. The third thing is hire professionals for assistance. I mean, no brainer, right? You need a very competent, trusted real estate advisor. You need a strong appraiser if you're going to have them appraising your properties. For rental values, find really good property managers that you can work with that have multiple units in the area that you're looking to purchase. The fourth is to take courses on valuation at your local association of realtors or a continuing education course. Maybe you want to go to school and just learn how appraisers assess property value. That could be really, really smart for you as a real estate investor to take on. The fifth one is you can use sites like Roofstock. Now, roofstock.com, they're really cool because they're going to calculate out your cap rate for you, give you opportunities to invest around the country, and actually show you how you can do it. They also help out with the financing side of it, and they also help out with the management side of it if that's what you would like as well. Roofstock.com. Okay. Mistake number 4, underestimating repair cost. And again, another thing, underestimating repair costs, whether you're going to do a buy and hold or a flip, happens all the time. It's inevitable that you're going to make this mistake at some point, and that you're probably going to make it on your first one, just simply because you don't know exactly what to expect unless you've been involved with your Real Estate Investor Association and you got a good mentor on your side working with you. So it's really important that as you devise a plan here that you learn to avoid large mistakes by having a good repair estimating system. Now, there's sites that you can go to for this that get a lot of help with this. Again, number one, start with your local real estate investors association. The link will be in the show more description below. And sites like biggerpockets.com. Love biggerpockets.com. I talk about BiggerPockets a lot on this investment series of my channel because they're just that freaking amazing. Check them out. Give them a look and see if it's right for you. My guess is they can help you a lot, because they have all the tools, they have the books, they have the articles, they have the connections that can make you successful. So mistake number 5 is running out of cash. Now, obviously, we might be on a shoestring budget whenever we get ready to invest in real estate, but we don't want to maintain that shoestring budget. So that's why we invest in the real estate, was to turn a profit, whether it's buy and hold, flip, whatever, wholesale, what have you, right? So the point is that cash is kind of like the fuel in your car. You run out, it goes to empty, it doesn't go anywhere. You got to be careful about not running out of cash whenever you're doing your real estate investing. Number one reasons, or the 2 reasons that this happens all the time, is underestimating repair cost, underestimating future capital expenses on rental property. So again, it goes back to underestimating the true cost of owning that property for whatever purpose that you have for it, whether it's renting, flipping, what have you. Mistake number 6 is letting your emotions drive your decisions. It's very, very common. You see this all the time in residential real estate whenever somebody's buying a primary residence. A lot more understandable, though, when we're talking about somebody's primary residence, and it should, by its very necessity, have emotion attached to it as a primary residence, because that's the house you're actually going to live in and make your own. So decision-making thought process a little bit different there, but when you go into an investment mindset, you got to look at the calculations. You got to make sure that everything looks great by the book, by the numbers, and you got to balance your enthusiasm with cold, hard, objective analysis, and making sure that you're doing what's fiscally prudent for your pocketbook, for your investment strategy, so you can continue to grow and to flourish in your real estate investing career. A lot different than actually just buying a primary residence that you say, okay, that are listed for X number of dollars. Yeah, I'll pay out of pocket if I got to, or yeah, I'll do this if it's the right house. I mean, I did it. I personally, I'm a trusted real estate advisor. I've closed over 100. I've helped over 120 families over just the past 4 years alone. And look, when I bought my primary residence, whenever my most recent one, I was like, okay, yeah, whatever I got to do to win it, I'm going to win it. That's just my thought process whenever it comes to the primary residence, if the house is that right. So when we look at investment, though, and we start looking at quadplex, multiplex, duplex, what have you, single family home, my thought process gears completely change. It goes straight to the cold hard analysis, cold hard facts of the situation, capitalization rate, what's the future growth trends look like in this area, future resale value of this area, rental trends in this area, and then what's going in around it, what's the school district ratings, and looking at all that information so that I can move forward and make a good financial decision as far as an investment property is concerned. Same thing. Turn off the emotion, turn on the logic, okay? Mistake number 7 is choosing the wrong real estate strategy. Here we go again. Real estate strategy is everything. You got to know where you want to invest, your niche, your strategy, what process you're going to take. For reference, strategies like, are you a buy and hold investor? Are you a wholesaler? Are you a private money lender? Right? I mean, that's actually one form of doing this. You could offer, if you have money, then you can offer your money to help other people buy their investments. Are you a note buyer? I mean, there's so many different strategies. Niches are whenever you start getting into residential, commercial, industrial, office space, land. You know, there's so many different things. In fact, I made a real estate investing guide. I'll go ahead and reference that throughout this video as well, and make the link available in the show more description as well, so that you can have that information for your review. It is an 8-part series, extremely in depth. Okay, so mistake number 8 is choosing bad contractors. Again, you got to have your team of professionals ready to go, and you got to going back to mistake number 7 real quick, choosing the wrong real estate strategy. If you know that you're going to be a flipper, what should you have ready for you? You need to have a trusted real estate advisor, preferably they got some connections into good painters, good contractors, or they know where to point you to get them. When you start finding out which ones are going to work better for you and work for the way that you need to work and that you click with, clicking is actually very important. Even in cold hard calculations, clicking is still important. You got to make sure they're going to do their job and do a great job, right? And that you can count on them, and that they're contractors that will do good work, finish up on time, clean up after themselves, and that they charge reasonable prices. Those kind of contractors are very hard to find. They're like finding a diamond in the rough or a treasure in the sand of a beach. It's something to think about, but you need to have your team ready to go before you get into launching your investment career, okay? Mistake number 9 is not using your buyer due diligence. I mean, why the heck wouldn't you do it? A lot of people, especially more seasoned real estate investors, might say, I want a quick close, I'll offer cash, and I'll waive all contingencies. Well, look, What was the first part of that sentence that I started with? Seasoned investors, people that have already taken their lumps, people that have already taken their scars, and they have a very good assessment and very good understanding of how much it's going to cost them to fix a property by just walking into it and just looking at it. They know what their cost is because they have their team. They could show pictures to their team of contractors and say, how much is this going to cost? And then based upon that, they go in and make their offer. As a first-time real estate investor, you want to be very, very leery about trying to do any big boy plays with quick closes, buying as is, not using buyer due diligence. What you want to do is slow your roll and actually use your buyer due diligence and make sure that everything is right for you. Things that you might want to consider, at least 4 things that you might want to consider in using your buyer due diligence is to obtain a very good professional third-party property inspection. Property inspections are very, very important, even as a real estate investor. You need to know what you're buying. You need to know what you're getting yourself into. It might not be a deal killer for you, but at the same time, if you see some things in there that doesn't fit your flipping budget or your rental, getting it rehab for a rental budget, then maybe you should walk away from it. The second one are your repair estimates. Going back to mistake number 3 here, underestimating or misjudging the repair cost of a property. The third is evaluating the zoning and local ordinance. You know, is it a college town area that maybe you can't, it has a law that you can't rent to more than 2 students in that property, right? Pretty interesting law. So it'd be one of those kind of things that you'd want to consider in learning in what's going on in your area, in addition to the residential zoning districts that that property resides within, okay? So then the fourth one is getting a professional third-party opinion and value of the rental comparables. So where are you going to get that, right? Where are you going to get that? Right here, by getting yourself a trusted real estate advisor. So just to be clear, when I say right here, if you're living in New York, don't ask me for rental comparables. As much as I'd love to help you, know nothing about it, got no access to the multiple listing service over there, can't get you the data that you would rightfully deserve. But what we can do is put you in touch with a trusted real estate advisor that knows how to work with you, the investor, and then you can start building your team from there, okay? Mistake number 10 is not learning from your mistakes. School of hard knocks, right? If you don't learn from your mistakes, what happens? You're doomed to repeat them. It's kind of interesting. When I was in elementary school, I had a teacher that used to always tell you, if you don't learn from your mistakes, history is doomed to repeat itself. It's like one big vicious circle if we don't learn from our history. And it's something that always stuck with me from elementary school. I said, you know, that's actually makes a lot of sense. Why as a global population, why as a people, do we not pay attention to our history? Because if we don't, then we're going to be doomed to repeat it. And did we really advance as a civilization and as a people? No. Then why would we do that? Same thing that you got to take personal responsibility, learn from your mistakes, take your lumps, you're going to get your cuts, you're going to get your scars in the process of doing all this. It's not to discourage you, it's to prepare you. By having the foresight now that you know that, okay, what you're about to take on, you can take that deep breath in and move forward with confidence because you're doing the right thing by educating yourself. And now it's time to take this knowledge and put it into practical application, beginning with building your team and making things happen for you and listening to how to avoid these mistakes. Now what I'd like you to do is tell me what you're thinking about this video in the comment section below. Which one of these 10 mistakes real estate investors make all the time are most significant to you, and which ones would you like to add to this list? Obviously, there's a lot of different ones that we could go into. I mean, the list just would, this video would never end if we went into all the different mistakes. But for the purpose of keeping it short and keeping it relevant, we just want to identify 10 awful mistakes that first-time real estate investors make. So tell us what you're thinking about in the comment section below. Now, I'm going to pop up my contact information. If you want to reach out to me, just drop a line and say hello. Absolutely love to hear from you. Need help finding a top agent where you live? Just let me know. I'm always here to help out, okay? Now, if you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. And number 3, please share this video around with someone you know is going to be able to help, because just like you, I'm sure you could think of just one other person that could really benefit from this information today. Please share it with them. Thank you. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching today, team, and enjoy an amazing day.